Hello, everyone. Thanks for joining us today for Peakflo's webinar on modernizing finance leadership in 2022 and beyond. I'm Ashwin, and I'll be the moderator for this session. So before we start, if you have any questions to ask, please add them to the Q&A button, which is in the bottom of the screen, and we'll answer them at the end of the session. And we'll also be launching a couple of polls as well, so please feel free to participate in them as well. And also, during the Q&A session, you can also raise your hand if you have any questions. So I'd like to welcome our speakers also today. So first speaker is Saurabh, the founder and CEO of Peakflo. So after a 2-year stint at McKinsey and Company, Saurabh built 2 marketplaces, and one of them was acquired by Alibaba. And finally, Varun, the Chief Growth Officer at Singlife. So Varun has about 10 years of experience in digital business building and financial services across Southeast Asia and other global emerging markets. He also worked with Ernst & Young as a fintech leader and led various fintech businesses globally. So thanks for joining us today. And before we dive into today's topic, a few words about the Peakflo and what we do. So Peakflo is a collections and a payable SaaS built for Southeast Asia. With our simple API and one-click accounting software integration, it allows businesses to streamline their entire finance operations. So about 187 finance teams, ranging from early stage startups to unicorn companies, use Peakflo each week to get paid faster on the invoices by 10 to 20 days and cut down their bill payments by 50-90%. And they've also saved hundreds of man hours on finance ops. And lastly, we also provide reports on key financial metrics such as future cash inflow forecasts to enable smart decision making. And that's enough about us actually. Right now, I'd like our speakers to say a few words about them. So starting with Saurabh.
Yeah, no, thanks. Thanks for the quick intro, Ashwin. So I'm Saurabh, co-founder and CEO of Peakflo. As Ashwin has already given me you a background, I think our agenda to talk about today is, share some of the learnings that we've seen while working with finance teams across Southeast Asia, and share more about how these finance teams have, modernized their finance stack, and what are some of the actionable learnings from our experience working with these teams that we'd like to share with all of you guys who are joining us on the webinar today. So yeah, that's all from my end. Varun, a few words from you as well.
Thank you, Saurabh. And as Ashwin said, I've been working with a host of financial institutions in my past life and the current life. And it's really important as we emerge from COVID to look at use of technology and how technology can help us embrace the opportunities which can create. And there are things which have been changed for good. And how do we embrace the change for good? And how do we prepare for the parts of economy which will go back to normal? So the overall operating system and operating model of the businesses will be much different. It would be equivalent of when internet came, businesses changed. COVID will change the businesses as much as internet did.
Thanks, Varun and Saurabh. So now I think we can just get back into this topic actually. So as you have entered 2022, the general sentiment is that it's an exciting and challenging time for finance leaders across the globe actually, since they are ready to reform their roles and the future of their business. And according to a study by EY, 76% of CFOs feel their roles will be challenging, yet they think it's one of the most exciting times to be a CFO also. So Saurabh, what's your take on this?
Yeah, I mean, this is a general sentiment that sort of captures the macroeconomic mood really well. So, I think CFOs do feel that it is an extremely challenging time, and I think we see a bit of a bit of headwinds on the macroeconomic side, where globally we're looking at anywhere between 4 to 6 rate hikes of about 25 basis points in this financial year alone. And the second order effect that this is going to have on businesses is that this is going to make credit less cheap. And I think this will have a bit of a downward pressure on margins in some industries, especially all B2B industries, because the median cash collection cycle in, let's say, in our region, which is Southeast Asia, is about 93 days. And what that effectively means is 1 out of every 2 businesses, it takes them longer than 3 months to collect on an outstanding invoice, on average. And even regular businesses that operate on credit sales or offer credit terms to their customers will experience some sort of a pressure on margins because cash, the cost of capital is effectively going to go up. So cash flow optimization and adopting best practices in cash management will become increasingly important given the shift in macro environment. So I think this is what this survey alludes to. But I think for me, the silver lining is that companies that are looking to streamline their finance operations will definitely come out on top, as they are best positioned to succeed in this shifting macro environment. But having said that, I'll pass the buck to Varun, because he was a former partner at EY and probably can comment better about this latest survey that came from their stable.
So one of the funny fact was that the profits were actually helped a lot because $1 billion less was spent on travel for the year. And that changed the engagement economics of a lot of the projects. But the reverse part of this was suddenly the clients have realized that, okay, if all of this work and the world did not fall apart with this remote thing, then I would want to have offshore pricing. I don't want to pay onshore pricing anymore. There will be there's a significant shift. And just like when manufacturing got outsourced from, let's say, the Western markets to the Asian markets, and the knowledge workers post Y2K moved from those, over those years, economy usually has these cycles. So that cycle happened. And now the second wave of that cycle is going to come, where people are thinking, even outsourcing is separate. Can I just keep the people on my own payrolls and move them on a different places? And then suddenly we would need a lot more technology to manage those people, solutions to manage how you're going to manage expenses, currencies across borders. But people have started to revisit that if life did not fall apart, when these people never came back to office for so long and still not back, and maybe some of inefficiencies some places, but we didn't die. So if we have lived, we are stronger. How can we do away with these costs for good?
I think, thanks, Varun. I think right now we are going to launch a poll also, which is exactly similar to the topic which we discussed about, because there's also people who want to work from home. There are also a set of people who want to get back to office also. So right now, actually launched the poll right now, which everyone can participate. So basically, it's about where you're attending this webinar from, whether from comfort of your home or from your office actually. So Varun and Saurabh, I have two questions for you. Where are you attending this webinar from, and where do you prefer to work from actually, from home or from office?
So I'm attending it from office, and I prefer to attend it from office because I have a very large team, and the kick you get out of walking the halls and it's more of you're walking through the trenches and talking to each one. How are you doing? What's up? And the serendipity which comes. The online one works when you have a lot of relationship already with and trust with everybody, and you have to look at more transactional things. But which is why I believe there is a level to have. So I probably think there's a third option in my world per se, which is flexible. Where sometimes it's home, sometimes it's office, but that in person, I need a lot more of that because of a large team and new people. So I personally prefer, I would say, at least 70% office myself.
And what about you, Saurabh?
Yeah, I'm taking the webinar from my home, but I definitely subscribe to the hybrid work model that Varun mentioned. So it's incredibly powerful to sit together in a meeting room and brainstorm and come up with solutions to problems. And there is magic when people come together and think and discuss. However, I see a lot of value in allowing people the flexibility to work right from their homes. It sort of gives them more time, spend less time on commute. So I see benefits in both areas, and I think I'm pretty much subscribing to, let's say, 50-50 model, wherein you can work half time from office and half time from home. And yeah, I think that probably is going to be a reality going forward, which really nicely, I guess, segues to our next topic of discussion, which is linked to that, right?
Yeah, I think right now we're also looking into some of the challenges which are faced by financial leaders, which is also something which was discussed earlier also, in bits and pieces. So now digging into the general sentiment further, when we surveyed about 52 CFOs from Southeast Asia, it seems they are facing challenges when it comes to managing cost to support growth and capital management with the help of forecasting, and lastly, employee attrition. So can we touch upon each of these problems, starting with Saurabh?
Sure. I think managing costs to support growth, I think what I already mentioned around the macro headwinds sort of increasing the costs is definitely one. But I think to what Varun and I have been discussing over the last 5 minutes around how different employees will have different preferences when it comes to their work environment. This also will put a bit of pressure on all functions, not just finance, where leaders are now trying to figure out how to make sure that team is productive while staying distributed, because the level of productivity still has to match and meet the growth requirements of the company. So I think that might lead to additional costs. It might be a trade-off wherein you can opt in for lower rentals or smaller offices, but we're definitely looking at a lot of investment in productivity tools, or tools that allow, let's say in the case of finance team, to work really well cohesively and have access to a distributed finance stack that can be accessed from anywhere. So I think that's a little bit on in terms of what we learned from the 52 odd CFOs that we polled and what they mentioned.
So I'll start from the other side of this. So what has happened with the employee attrition and the Great Resignation wave is companies have started to relook at how do they staff their teams and what are the other needs they can provide to encourage. So people have figured out that the office needs to be seen as a tool itself from that perspective to provide, and you have to provide. I mean, if you do not provide the best-in-class technology solutions to people, then you will have a challenge to retain those people because you're doing so much remote collaboration. There's a lot more and those different kind of SaaS expenses and managing and planning those is one big part. The other part regarding accurate data for planning and forecasting, the supply chain disruption over last 24 months has literally helped the businesses understand the value of that, because stuff which you could take for granted earlier cannot anymore. And ability to not just look at your invoices, but look at other stuff impacting that business, from receivables, from supply chain, from shipping information, and having that single view to take business decisions. That is something which I have seen to be one of like a big salient feature. And of course, the last one is like managing cost to support growth is one side your inflation, another side your margin pressures. So the idea is to look at go after domains and segments where you will have less competition and less disintermediation from that perspective. So to identify the right place you want to play in is more important, because otherwise you will be crushed on inflation on one side, people leaving on the other side with disruptions in supply chain. It's not pleasant.
I think that's actually a pretty interesting take, actually, Varun. And I think like now we just got into the solutions. Now let's also like more into like what are the solutions we can also look for these challenges, actually. But like when you have these like challenges, actually, but do you think is it possible to tackle some of these challenges by modernizing finance teams? Like what are their like high level solutions? Like let's start with automation, actually. Like what you're seeing in the industry is like, like when implementing automation, instead of jumping into automate everything, it's best to begin on a single process, actually, and to ensure like it doesn't have any critical impact. But anyways, theory aside, how do you think this works in the real world?
Yeah, I mean, just as an example, right? I'll just give you a very specific example. So as companies grow exponentially, they have different processes that are incredibly time consuming, and there are too many layers in the process. So I mean, just as an example, let's look at the AP process. It starts with a request for proposal, then vendors submit their quotes. Then you pick a vendor based on the most optimal balance between the pricing and quality. Then the vendor sends you an invoice. The invoice goes to multiple layers of approval, and then finally the payment is made. And even at the time of making the payment, the finance teams are manually coding that payment in their bank app. Hopefully they don't make a decimal error or something, and then they are then reconciling that payment in the accounting software. So this entire process of, let's say, paying a bill has just gone through, I don't know, 10 steps or 7 steps. And this is a very archaic approach. And it works really well if you're doing maybe 50 bill payments a month, right? Or 20 bill payments a month. But for most of high growth companies, when their revenue starts scaling, their number of bill payments go up or their customer invoices go up, that increase in finance costs usually grow exponentially along with the revenue. So to ensure that the cost growth is linear or flat while the revenue growth is exponential, it's really important to sort of figure out, how to automate and how to put in place workflows that can support that growth for these companies.
So the other part sort of related to that is enabling your people to understand these technologies, because one part related to AI is also AI is too sophisticated. Then people don't believe it. So the premise is to ensure the people are playing ball with the AI, it has to be more relatable, and people need to be able to trust and believe in the answer. So which is why it's important to roll it out. The end state is one, but how do you get through that end state? What's the process? How do you ensure people are part of that journey? They are involved with that technology being implemented. That is something I've seen to be a lot more crucial, because otherwise what happens is you create a human machine conflict, and people start to feel that these technologies are there to replace my job and everything. So that feeling that this technology is there to help me be more effective and create more value, and it is not, because you mentioned, right, the above 50 payments.
Correct.
Somebody's doing so that your job will be there. There are more important things, which are more value creating things, which will be more self-fulfilling. You will learn more, you will have more actualization, self-actualization by getting this, helping with getting this stuff automated. That is a hugely important thing.
Absolutely. The self-actualization bit on Maslow's hierarchy, it's not just theoretical. I think when teams, and this sort of plays really well, or dovetails really well into that point around employee attrition, because the higher the self-actualization, the better the job fulfillment, the lower are the chances that people put in their papers, during this great resignation, as the media likes to call it. So I think having exposure to meaningful and high value tasks is really key. And it all is sort of connected wherein you can put in workflows or processes that help you streamline the more mundane and repetitive tasks, like Varun mentioned, so that the team has the correct support and time to actually focus on the more meaningful and high value tasks. I think that is crucial.
Got it. And what about using advanced AI? Since we touched base on AI, actually, what about using advanced AI powered analytics to get accurate data and perform effective planning, actually? Because due to the increasing competition in data-driven markets, actually, firms are adopting to state-of-art information technologies for competitive advantage. But in real world, how can companies make use of AI to get evidence from analytical results to drive smart decisions, rather than relying on the intuition of their managers?
Yeah, I'd subscribe to what Varun just mentioned. So the idea is to not position AI as a replacement for your finance staff, but to actually see how it can augment the finance staff capabilities, right? So you don't want to rip out established processes or overall the entire existing process, because that never works and it will never be adopted. You want to have incremental changes that lead to step function improvements. So those are most likely to get adopted first. And an example of this is, tools that connect to your existing ERP stack or your existing accounting software. So you're not asking a company to, go in and change their entire accounting software or change the way they do invoicing or bill payments. It basically is a suggestion that, hey, we understand, we recognize this is how you're doing it. Here's a solution that, connects to your existing, invoicing system or your existing bill payment system, and will help you streamline and make payments faster, or will help you, streamline your collections faster. So I think that approach usually works a lot better than saying the existing process is garbage and this is now what you should be doing going forward. I think that never usually works.
So exactly. So advanced AI is, so I usually have this joke, right? So artificial intelligence is artificial. The real AI is augmented intelligence, where the people feel that this technology is augmenting my intelligence and help me be better than being something artificial. I mean, you don't like somebody telling you, I'm giving you artificial flowers.
I think moving on to the last one, employee attrition. So guys, if you remember, we actually launched a poll actually a few minutes ago to see where you're attending the webinar from actually. So it's pretty much related to the last point we're going to discuss actually, and I'm going to share my results on the screen right now. So I think everyone could see the screen over here. We actually see like a vast difference actually in the votes actually, like about like more people actually prefer to work from home or remotely than from office also. So this is also like one of the areas where we can also focus into employee attrition. And apart from that, like Warren mentioned also, like, employees don't want to do like a monotonous work actually, because they'll end up getting bored, and it does also lead to like employee fulfillment. Uh, but do you think like, like these kind of problems can also be solved through robotic process automation? Because like Ernst & Young has reported about like 50 to 70% increase in productivity by automating most of the monotonous tasks actually. And Forbes also calls it as a gateway drug to digital transformation. So what do you think about this, Varun?
See, the premise is, robotic process automation is again is valuable, and the way I look at it is automation automatically. Some automation is done at a process level. Some automation is done by digitizing the documents. Some automation may need solutions like RPA. The key part is how it aligns with the overall business, and how people who are doing the work. They feel involved, and they see this as a tool versus a rival. So there is always merit. The question is, how do you position it as this is a tool, not a rival? So when somebody is drawing a horse cart, they should feel the wheel. They should feel that engine is not there to take their horse away. It's something to help them drive faster and longer and farther. You want to change the horse, not the person driving the horse. So the difference is that. How do you communicate that?
Yeah, that's a great analogy, Varun. That actually is a pretty good analogy. The idea is, you're making people more productive rather than replacing them. Makes a lot of sense.
So that's how I look at it, Ashwin. Sorry, I flipped your question into a different direction, but we are replacing the horse with a motor engine. The driver will be the same.
Got it. I think now that we have like identified some of the high level solutions for the most pressing problems actually, I think we can look at like who are the owners of the solution actually. So based on a study done by McKinsey, it's about like a number of CFOs that say that they're responsible for their company's digital modernization has more than tripled actually. Why do you think this is happening, Saurabh?
Yeah, so this trend is emerging where CFOs are now owning digital modernization in their org, and this is incredibly positive. I think the reason probably is that functions like finance and operations usually have the highest amount of time spent on things that add least the things that are more repetitive in nature and can benefit from automation or some sort of workflow management, so that the key stakeholders and the team in general has more time for value add tasks. So I think prioritizing the order of workflow streamlining is crucial over here. So I would like to build on what Varun basically has mentioned. It's important to make sure that people have the right tools so that they can shift their attention away from the more repetitive tasks to actually focus more on strategic finance tasks or planning and insights and forecasting. So I think that is crucial over here.
Absolutely, Ashwin.
Got it. Then I think right now I think we can also look at like the current finance function pyramid also, like how it also like stacked actually. So Saurabh, would you like to like tell us more about how the finance function pyramid works?
Yeah, the finance function pyramid. This is my favorite. This is my favorite, theory out there, which is the finance function pyramid talks about how most finance teams are structured in the sense that if you look at the bottom of the pyramid, it represents the amount of time spent. And as you go up the pyramid, it actually represents what tasks add more value. And it is a pyramid because, like we've been discussing so far, a lot of time is spent in things that are, and resources are spent in things that are more repetitive in nature and are not adding the highest amount of value in terms of growth to the company. So I think a great prime example of this, are things like reconciliation and paying bills and collecting invoices. Whereas the things that suffer the most is that, especially in high growth companies or early stage companies, not a lot of time and attention is given to strategic finance, or not a lot of time and attention is given to, real planning, insights, forecasting, which can actually help the company, position itself for future growth. So an example of a strategic finance decision for a company could be, we've identified that, there is a gap in our process. How do we create a process to overcome that problem? And I think most companies get stuck in a firefighting mode instead of, spending time in investing into new workflow creation or new process creation, or even looking at new revenue opportunities. And all of those tasks usually fall under the bucket of strategic finance. Most teams don't actually have the time or the bandwidth to actually create or take up these new initiatives. So I think this is how this pyramid is structured. And I think just to sort of draw upon what I saw with the last 5 years while I was working across marketplaces, right? So this is including companies like Alibaba, or even before that, when I was at early stage startups. I think one thing was common, wherein if you go and look at business functions like customer service, everybody is using high level of industry leading tools like Zendesk and Talkdesk, and the teams are heavily optimized for productivity. If you look at the marketing and sales team, they're using tools like HubSpot or Sales Marketing Cloud or Pipedrive, and the team is primed for productivity in the sense that a lot of the repetitive processes are completely automated away, and the teams can focus on their core competency, which is, in that team, it would be to sell. But then if you flip the equation, I've always been continuously amazed how finance and operations teams are like spending hundreds of man hours on repetitive billing and account receivable follow-ups, and payment reconciliation and reporting, and like, the example we were discussing earlier, like vendor payments and the entire process. So a lot of this effort can be cut down, and you can actually apply the Pareto rule, which is like, you can get 80% of the output from just 20% of the effort. And this rule is already being applied across multiple finance functions, like I mentioned, in CS and marketing and sales. But I still see that a lot of the finance functions are not primed for it, which is why you have this model of finance pyramid, which is so common, to the point that it is effectively a theory as of today. So yeah, that's basically my take on this.
Got it, Saurabh. So I think like right now, like we're going to like do another poll, which is also like pretty much similar to the each stacks we saw on the pyramid actually, because like as you mentioned, like in each of the stacks, like there are like more areas where we can actually like do some improvements actually, like where companies can actually like do better. So that is what the next poll is about, which everyone can see on the screen. It's like in which areas do you think your company can do better? It's actually a multiple choice question, so people can choose more options over here. So Varun and Saurabh, like a question related to this poll we have right now. What are the areas did you think like in your previous work experience, like thought like your company could do better, and how did they even do better on those tasks? Like it could be like planning or forecasting or any of the options actually.
So I'll give an example of like innovative growth hacks, right? So for insurance policies, for example, the regulation says that customers must have the physical copy. Customers must be able to access physical copy of their insurance policy, and that's like 100-page document. That's inefficient, non-sustainable, and everything. But it doesn't say that you must ship these in a post. So what we did was a simple growth hack that you can have it, you can come and collect it if you want. And we didn't have it. So if somebody really wants it, they come, we serve them nice coffee and some snack, and meanwhile we'll print them and then we'll bring it. And that way we saved all of that process. And 99.9 was okay. And the couple of people who came, we had good coffee with them.
That's great. That's great, actually. I think like now like going back into the topic also, I think Saurabh, I have like about like 2 questions over here for you actually. Now that like you explained like how the finance function pyramid works, how do you think CFOs can invert the finance function pyramid, and how do you think looking at the bottom of the pyramid, how do you think like modern teams are paying their bills and collecting their invoices?
Yeah, I think we're getting a few comments in the chat, if I can see, wherein a lot of people think that they sort of need help with all or at least the bottom three, and I think just to sort of touch upon that, we can break it down, right? So let's go it in a let's go about it in a structured way. So I think let's start with paying bills and collecting invoices. This is probably takes bulk of the time. So what we see when we work with high growth companies, we see modern finance teams streamline their entire AP process. And AP is basically a fancy term for paying vendor invoices or paying your bills. And like I was mentioning earlier, it starts from an RFP, goes to a vendor quote, goes to vendor sending you the invoice and internal approvals, and then manually coding it in the bank. They're like 5 to 7 step process that a finance manager, that is responsible for AP has to perform. And about 3 to 4 steps out of this 5-step process can pretty much be streamlined so that the finance manager can focus on the most critical elements where they are indisposable, right? And they can basically use a software to streamline most of the functions. So I think it starts with first codifying that bill. So ideally, you want to just forward it to an email ID, or you just want to drop it in a box, and that physical bill or that digital bill automatically gets fed into your accounting software. I think that's the starting point. And then once the bill is tagged, let's say the bill is relevant to the IT function or the marketing function or to the sales team, the correct stakeholder is then reached out for approval. So that is crucial. So having a approval workflow in place that has a matrix level understanding of, okay, what is the category of this bill, and then B, what is the amount of the bill? Because you probably don't want approval from 3 people for a bill that is for $50. But you do want to involve multiple layers of approvers if the bill is, let's say, $10,000. So I think that's sort of a smart approval workflow, and having that codified is also extremely critical in sort of streamlining as the company grows. How do I make sure that my approval process is very, very smooth? And then lastly, I think not having to open up a separate app like a BPI app or a DBS app and having to manually code that payment is also crucial. You're trying to minimize the points of friction. So we see most modern finance teams have a centralized AP system. They load their stuff into it, and then schedule the dates. They select the payments when they want those payments to go out, and then those payments get automatically dispersed. So with one level of engagement or with one single interface, they're able to streamline 2 or 3 steps. So I think that's the most common thing that I've seen in AP. And I think we're happy to sort of touch upon AR for a second. So I think on the receivable side, Ashwin, what we see is like modern finance teams are automating when it comes to their customers. They're segmenting their customers into buckets. So like a lot of companies that we work with, they have a handful of large enterprises, like let's say top 2 to 5% of their revenue, their customers are driving probably 50% of their revenues, which are large enterprises. And they have a completely different collection process with them. A, they would have credit terms because they are large enterprises. And then B, they would have a lot of manual touch points in that collection process. So potentially, the first reminder is sent out to somebody in the finance team in your customer's organization. The second reminder is probably sent to, I don't know, head of finance. Once the invoice is, let's say, 2 weeks overdue, it's probably the reminder is being sent to your commercial point of contact. If the invoice goes, significantly overdue, let's say 60 days overdue, it's probably being escalated to the CEO of your customer. And I think a lot of those processes that are very well codified in the minds of finance managers and very well codified in the minds of finance leaders, they can actually be put into workflows. So you can categorize your customers and say, okay, these are my delinquent customers, these are my large enterprise customers, these are my small and medium customers. And my SMB customers are more responsive on WhatsApp. So let's send all those reminders on WhatsApp. Or my large enterprise customers are more responsive on emails. So I think that is one of the ways in which we see a lot of organizations approach this. I think using smart workflows is crucial. And I think one of the most annoying things that we get as feedback from finance teams is that when they're trying to chase their customers to collect on outstanding invoices, the customer finance team comes back to them and says, oh, can you send me a statement of account? And in most cases, it can be a delaying tactic, but in some cases, they genuinely do not have access to a statement of account and they really need it for processing. So having a self-serve portal for your customers is crucial over here. You can basically say, hey, this is your link. You can generate a statement of account based on activity. You can generate a statement of account based on outstanding amount. You can look at all the invoices you've paid in the past. You can look at the payment records. You can look at credit notes. So having a unique portal for each of your customers is very, very powerful, because then allows your customers to self-serve. It allows them to just generate whatever they need to for their internal requirements, and it streamlines the entire payment process. Otherwise, it's just a fiasco when there are emails being exchanged back and forth and they're asking for SOA, then you're sending SOA, then they're saying, oh no, we want activity-based SOA, and then you're generating one more SOA and sending it. And then they're raising a dispute on some line item in the invoice. Typically a self-serve portal allows your customers to ask questions based on line items, potentially raise a dispute that is relevant to your industry. And all of those dispute resolution can be managed from a centralized dashboard. So it's sort of like applying the best practices of what Zendesk and Talkdesk have done for the customer service industry, and bringing the best elements of that into the finance industry. Trying to have as much visibility as possible with your customers, and streamlining the entire payment collection process. So I think those are some of the best practices that we see modern finance teams having adopted, at least in Southeast Asia, as they scale and they grow, and their finance teams hopefully do not break while their growth is happening.
Got it, Saurabh. I think that's like a pretty structured way of how modern finance teams are paying their bills and collecting their invoices also. Now that we have moved above the one layer above on the pyramid, so can you also explain how modern finance teams are also working on reconciliation and record keeping?
Sure. I think reconciliation and record keeping is one of those activities that is super, super crucial to actually know what is going on. Right now, most finance teams are doing it in a standard way, wherein they take an export of their bank statement. They look at the accounting software where they import the bank statement, and then they're trying to match bank statement with the account transactions, right? And the problem in that approach is most of the customers, when they make a payment to you, they do not put the reference number. Probably 30%, 40% of your customers would have great process and they would put the reference number for the invoices that they're paying. But in our experience, at least in Southeast Asia, we see that 1 in 2 customers, when they make payments, do not put the reference number. And what usually ends up happening is like in our previous company, we used to have a WhatsApp group called missing payments or hunting payments, and the entire account management and sales team would be part of it. So the finance team would just post and say, I just got $3,000. I have no idea which customer has paid it. There's no reference number. It doesn't even match an outstanding invoice amount. So everybody's just trying to scratch their heads and trying to say, how do I reconcile the books for this? So we had all these mystery payment interactions, and I've seen finance teams being pulled into it. It's very, very common in these companies. I think what we now would want to do is connect your existing ERP system or your existing accounting software to a system that streamlines your Recon, right? So it will be connected to your bank account. It will sort of import all the data from there and very smartly map the payments to the outstanding invoices. And in cases where your customers are making partial payments, the solution is very simple. You basically have virtual accounts for your different customers. So let's say if I'm a company and I have 100 different customers, it's very simple to actually generate 100 virtual accounts, so that at least I know at any given point in time what is the outstanding balance for every single customer that I have. And I'm at least able to identify, if not the invoice, but at least the total outstanding balance that should be accrued to the customer in their ledger, right? So I think those are some of the most simple solutions, and it all starts from using the existing finance stack that most finance teams use, whether they're using a Oracle or they're using a Xero or a QuickBooks, depending on their size, and connecting it to a simplified system that can sort of streamline the entire Recon process for them.
Got it. I think now we're also moving closer to the top of the pyramid with one step left ahead of us, which is actually reporting and forecasting actually. So same question over here, Saurabh. How do you think modern teams are also approaching this?
Yeah, I think to what Varun mentioned, early on, he said it's very, very important to not replace, but to augment the capability, or to basically, make the horse better. For I think, if that I remember the analogy correctly, and I think this is where we're entering into a territory wherein it's adding a lot of value, and we want to be very, very cautious to not automate something that doesn't require automation. You want to give finance leaders and finance teams the right tools so that they are able to actually make smarter decisions, and give them more valuable information which they currently don't have access to. So great practical example of this is that you can connect your accounting software or your ERP system to a cash flow forecasting engine, and that engine can study the last 500, last 1,000 invoices, last 10,000 invoices, depending on how much data there is to mine, and actually predict your cash inflows. So it can say, okay, fine, you have 100 customers. This is the payment behavior of your customers. And these are the invoices, and these are the dates when these invoices are going to be likely paid. And all of a sudden, as a CFO, I have very effortlessly created a cash inflow projection with no effort. And now I can, with a high degree of confidence, plan my cash outlays. So if I know that $500,000 or $1 million is coming in the month of February or in the month of March, I can make better decisions about that additional hire that I can approve, or the additional marketing campaign, or the offsite investment that I can approve, because I have more visibility in what my cash inflows look like. And I think those are the sort of tools that make sure that the capabilities of finance leaders is augmented without automating something that should not require any automation. So I think those are some of the best ways in which we've seen modern finance teams sort of anticipate future cash inflow forecasts and use it for planning. Yeah, and then the same logic holds in staying informed on the next one. So I think we can definitely move to the next section now.
Okay, thanks for explaining the step-by-step breakdown of how CFOs can invert the pyramid stack, and also how modern teams are approaching. Before we move on, let's we have a couple of questions also on the Q&A, so let's take a look at them actually. So the first question is from Anthony. Collection process is important for cash flow and accurate planning, but different types of customers pay at different times. How to customize the payment follow-up? So that's the question, Saurabh.
Yeah, Anthony, thanks for your question. This is a great question. So I think what we currently are doing, just to give you an example of Peakflo, we classify customers based on their payment behavior. So there would be some customers that are timely payers, late payers, delinquent payers, and that historical payment behavior is actually used to determine the likelihood of when an outstanding invoice that is allocated to them would be paid. So I think currently we have a 87% accuracy rate in terms of identifying which invoices will be overdue or which invoices would be paid on time. And based on the categories of customers that you then have based on the payment behavior, you can create smart workflows. So you can have a different workflow for doubtful debt customers that are, let's say, large enterprises, and then have a completely different workflow for large, for small and medium customers that are also doubtful debt customers, or they are delinquent. So as an example, you can have faster escalation process for customers that are, always paying late, meaning you can escalate to their, senior management a lot faster before the invoice is severely overdue. So that is one of the ways in which you can customize follow-ups. Another way to customize follow-ups is the channel on which you reach out to them. So a lot of SMB customers respond really well on WhatsApp. Large enterprises tend to respond well on structured channels like emails. So you can have a bit of differentiation in channels. Reminder frequency is another way in which you can customize. So customers that are paying on time, there is no need to sort of remind them as frequently as the customers that pay late. I think that logic does not hold true. You obviously don't want to send them more than the reminders that they need, and vice versa for customers that always pay late. And the last point is for delinquent and doubtful debt customers, it's important to establish plan to pay dates. So a software like Peakflo basically allows finance teams to automate and capture plan to pay dates, especially from the doubtful debt customers, and it would actually show up in the workflow. So it would, one day before the invoice is due, it would automatically trigger an email to your customer or a WhatsApp to your customer saying that kindly indicate your plan to pay date. And then that plan to pay date, once it's captured, helps things, streamline things. So I think, and just to sort of understand how does Peakflo collect the data of my customers and categorize, I think it's based on the historical payment behavior of your customers. And in terms of, rolling this out, depending on what is your current finance stack, whether it's a ERP system like Oracle, or whether it's a accounting software like a Xero or a Zoho or a QuickBooks, it can be fairly quick. We typically see rollout times from companies that start working with us to actually go live within a week. So the rollout can be fairly quick. However, if companies are using some sort of an in-house order management system or an in-house invoice creation system, we have a API that can also be very seamlessly integrated in roughly a week, and we can give the exact same level of insights and categorization to companies. So I think that's to quickly answer your question. Mina as well, asked a question about how can we improve our collections and reporting KPIs without adding new staff? What are the options to make the team more productive and monitor them better? Yeah, so Mina, great question. The idea is to make the team better, and without increasing the workload. So I think to the point that Varun was mentioning earlier, it's really important to augment their capability, to add to their capability so that they can do 10 times or 5 times more with each amount of time that they're spending currently. And to that, there is a whole host of reports and dashboards that can be used to do that. And I don't want to take up the space on this webinar to deep dive into those things, but please feel free to check out our website, and you could see what are some of the ways in which the capabilities for finance teams can be augmented. But yeah, I think that's those are all the questions I see in the
we have
Q&A.
a question on chat also from Shreyans Modi. So they want to know, like, does Peakflo not integrate with Tally ERP actually?
Okay. Yeah, no, thanks for your question, Shreyans. We haven't rolled out the Tally ERP integration yet. So it's not a native integration. We do have APIs. So, for companies that are using accounting softwares that are not Xero or Zoho or QuickBooks or NetSuite, we basically provide APIs that can connect to your existing order management or invoice creation systems. So I think the short answer is, our team can discuss and work out how to build that out. But we also have APIs that can basically are very, very adaptive and can connect to any system out of the box. So yeah, I hope that answers the question. Yeah.
I think thanks for answering these questions, Saurabh. I think now we can also get back into this topic also. I think we were also looking at how finance managers can CFOs are inverting their finance function pyramid, but there are also some barriers also which comes in the way also. A CFO might come across some of these barriers actually when they're modernizing finance team. It doesn't have to be related only to the finance pyramid which you look. It can be in broader terms also, in any ways we are modernizing the finance stack actually. So Varun, do you have any take on this also, how we can challenge these barriers actually?
See, I believe a lot of these barriers are more cultural than anything else. And as long as the broader team and groups are able to align on those, these are more change management than technology barriers, in my view.
Thanks, Varun. Saurabh, would you like to add anything to it?
No, I totally agree. I think there's definitely change management barriers rather than tech barriers, and a lot of the barriers are more psychological than actual tech related functions. So I think most companies are resistant to change, and sometimes a lot of these digitization efforts require specialized skill set. So if any company that has undergone an ERP transformation, you literally have to hire consultants. And I'm not going to name names, but we work with a lot of companies that have consultants on their payroll for specific ERP systems, that literally make integrations with Peakflo to their ERP system, and we always are wondering why it requires so many specialized skill sets to just adopt a simple solution. So I do think that that sometimes can be a very critical change management related issue. But I think apart from that, there's always a fear of the high cost of investment, or having limited knowledge, or having a bad experience from past digitization efforts. So I think all of those factors can potentially contribute to this. But what we've seen with high growth companies, at least in Southeast Asia, right, which is our core region focus, we've seen that the high growth companies have, out of necessity, had to move away from the repetitive tasks, and in order to make sure that their costs do not explode as their revenues are growing, it is imperative for them to actually look at it's imperative to look at important integration, to look at digitization efforts. So I think that is my sort of small take on the barriers. Yeah.
I think this is also like something related to like high growth finance companies also, like since like once they have crossed the barriers, actually I think they'll also like start reaping some benefits actually on digital modernization. Like, do you have anything to add to this also, Saurabh?
Sure. Yeah. So this is the part where I just shamelessly plug Peakflo as we wrap up our webinar. So to all the attendees, there are a lot of high growth companies in the regions. There could be very large unicorns like NinjaVan, to very early stage companies, to companies across various industries, whether it's a brand like Luther, which is a law firm, to marketplaces like Sarisuki and Everplate. So we see a lot of adoption across multiple industries. But I think what the common thread amongst all these companies that have actually undertaken this digital modernization with Peakflo is that they are all high growth companies, and they had to figure out a way to sort of make sure that their finance function scales seamlessly to support their growth in revenue. And if you're also a company that has a lot of growth, and you want to make sure that your finance function can scale seamlessly to support that growth, our team would be very, very happy to have an exploratory chat and see if our stack can be beneficial at all. So thank you so much for attending this session, guys, and thank you so much for your time. We'd love to take some questions if there are any that we've left out in the chat, but I still think we have 4 minutes on the clock. So happy to answer any outstanding questions.
We do have a question from Ahmed. How to automate report generation, as my team spends a lot of time on it?
Yeah, thanks for that question, Ahmed. I think report generation is one of the biggest time drains or time sinks, and we totally understand. So I think the way it works right now with Peakflo is we provide a simple API, and we allow you the ability to sort of create custom reports. And we actually have an in-house function that can help you set up these custom reports. So the API would be connected to your OMS or your existing invoice creation system. And based on the report requirements, it can basically generate these repetitive reports, whether it's on a daily, weekly, or monthly basis. And that basically can ensure that these reports are dynamic, meaning once your data changes, these reports update themselves. But yeah, it's one of the most commonly used features. We do have out-of-the-box reports like cash flow analytics and customer status tracking, and yeah, there are a bunch of reports, credit control, invoice status tracking. But some companies obviously have specific requirements, and in that case, you can use a tool like Peakflo to create those custom reports. So yeah,
I think like now that like we just also like answered the question, also spoke about the high growth finance teams. So a few minutes ago, actually, we launched the second poll, actually, like where your company can do better, actually. So based on the poll results, actually, it's pretty much similar to like how they can also focus also. Like, let's say like once the team has become like a high growth companies, they'll start noticing certain changes, actually. Like their teams would be like more like linear in size also over there, and they'll also like they're also like have like a low cost efficient also, because like since they have automated a lot of they also started automating a lot of their low value tasks also. And what happens is, because like with automation entering the picture also, finance teams start using more smart workflows powered by AI. And along the traditional skill sets, they'll also be upgraded in using the SaaS tools also. And when all these means are like set in place, now they can actually focus more on the top of the pyramid, which is the strategic finance. And I think like it pretty much aligns with the results of the poll also, which we have also, because like 80% of the poll feel like the company could do more on like focusing on high value added tasks actually over here. So I think with this, I think we are just coming to the end of the webinar. So we just have like 1 more minute left. So does if anyone has any questions, you can just like put it on the Q&A actually right now. Or
I think we've answered all the questions in the chat, if I'm not mistaken. Thank you, Park March, for your comment. Our team will definitely, get in touch. Shreyans, we'd be happy to sort of get in touch and see how we can work together. Yeah, I think this pretty much covers it. And thank you so much for your time, Varun, for joining us today. It's been very insightful, and to hear your thoughts and to learn from you during this call as well.
Thank you so much.
Yeah. So thank you everyone for attending this webinar also. So this is actually a recorded webinar. So we will be also like sending this webinar to all the who are registered actually by email. So like I said, like if you have any questions, you can always like feel free to reach out to us actually. So with this, I'm ending this webinar actually. So thank you all for joining once again, and have a nice day then. Bye-bye.
Thank you.